Welcome to Part 3 of Writing a Business Plan. In Part 1, we discussed the executive summary and company description sections of the business plan. In Part 2, we discussed market analysis, organization and management, product or service line, and marketing and sales. In this part of the course, we'll discuss other sections of the business plan, such as funding request, financial projections, and appendices and exhibits. Let's jump right in. Funding request. If a company plan is being utilized to raise money, the funding request section is a pivotal part. This section discusses the company's precise fundraising needs and gives a succinct justification for how the money will be spent. This section's mission is to convince potential financiers, lenders, or other investors that the company is a solid investment and that the money will be spent wisely to meet the company's financial targets. The company's finance needs are outlined in the funding request section's first section. This should contain a succinct and clear explanation of the overall amount of money the company is looking for as well as the precise purposes for which it will be used. For instance, the business might want money for working capital, equipment purchases, product line expansion, product development, or hiring more people. The usage of the funds is covered in the next section of the funding request section. This should contain a thorough justification of how the money will be used to accomplish the company's goals both internally and externally. This could involve talking about the specific projects the business expects to work on, including R&D, marketing, or sales and distribution. The discussion should show how the funds will be used to produce revenue and provide a return on investment for the company and its investors. It should be founded on a full grasp of the company's business operations. A description of the company's financial predictions follows in the funding request section. This should include a thorough breakdown of the company's revenue and spending estimates, along with a description of the underlying assumptions. The financial predictions should show how the money will be used to produce revenue and provide a return on investment for the firm and its investors. They should also be based on a thorough grasp of the company's business operations. A summary of the company's current financial status and past financial performance should be included in the funding request section in addition to the financial projections. This should cover the current financial statements of the business, such as the balance sheet, income statement, and cash flow statement, as well as any information on past financial performance. Potential investors, lenders, or other financing sources will be better able to grasp the company's financial status and evaluate the risk involved with investing in it with the use of this information. The ownership structure and management team of the organization are covered in further detail in the following section of the funding request. This should cover the present ownership structure of the business, including the percentages of shareholders that own each stake, as well as an overview of the management team, including their backgrounds and qualifications. Potential investors, lenders, or other financing sources can use this information to analyze the risk involved with investing in the firm and to gain a better understanding of the ownership structure and management team of the company. The company's exit strategy should also be detailed in the funding request section. This should cover how the company intends to eventually sell the business, whether to another business or to the general public through an IPO. The exit plan should show how the money will be used to produce a return on investment for the company and its investors and should be founded on a deep grasp of the business operations of the company. Remember, if a business plan is being utilized to raise money, the funding request part is an essential section. This section discusses the company's precise fundraising needs and gives a succinct justification for how the money will be spent. A strong and thorough money request section can boost the company's credibility and improve its prospects of obtaining funding. The financial position and future prospects of the company should be accurately reflected in this section, which should also be well researched and written. Financial projections. A business plan's financial projections section is essential because it gives stakeholders, including potential investors and lenders, a clear picture of the company's anticipated financial performance over the following 3 to 5 years. The income statement, balance sheet, and cash flow statement for the company should all be specifically projected in this part. The income statement, sometimes referred to as the profit and loss statement, gives an overview of the anticipated revenues, expenses, and earnings for the organization throughout time. The estimated revenue for the business should be broken down per line of products or services, as well as the anticipated costs, such as the cost of goods sold, operating costs, and taxes. Depending on the requirements of the firm, this information may be delivered on a monthly, quarterly, or annual basis. A picture of the company's financial situation at a particular time is provided by the balance sheet. Forecasts for the company's assets, liabilities, and equity over the following 3 to 5 years should be included. Understanding the company's financial soundness and debt repayment capacity requires knowledge of certain information. Understanding the company's financial position and ability to generate cash over time requires knowledge of its cash flow statement. The planned cash inflows and outflows for the business, including operating, investing, and financing operations, should be broken down in great detail. Understanding the company's liquidity and capacity to meet its financial obligations requires knowledge of this information. The financial projections section should also include any underlying assumptions or methods, such as anticipated growth rates, pricing policies, and adjustments to the competitive environment, in addition to these financial figures. With the use of this data, stakeholders will be better equipped to assess the company's future prospects and have a more thorough view of its anticipated financial performance. Financial predictions are susceptible to numerous variables and risks and are not a guarantee of future performance. They should not be seen as a promise, but rather as an estimate of the company's probable financial performance. Financial projections, however, may be a helpful tool for evaluating the expected financial success of the organization and for guiding investment and other important business choices when done properly. Remember, anyone trying to acquire funds or make wise business decisions should pay close attention to the financial projections part of a business plan. It is a crucial instrument for comprehending the firm's financial stability, liquidity, and capacity to produce cash and profits over time. It gives stakeholders a clear image of the predicted financial performance of the company over the next 3 to 5 years. It's critical to be as precise and realistic as you can when making financial estimates, while also keeping in mind the numerous factors and uncertainties that could affect the company's financial performance. Overall, anyone trying to make informed decisions about a company's future prospects can find the financial projections section to be a useful resource. Appendices and Exhibits. A business plan's Appendices and Exhibits section is crucial because it offers additional material to support key points and provide a fuller image of the organization and its goods and services. Any pertinent documents or resources that cannot be properly communicated inside the business plan's main body should be included in this section. Appendices and displays of several varieties, such as 1. Resumes of important personnel. This section should comprise the resumes of the management team's main players, detailing their educational backgrounds, professional experiences, and achievements. This data is crucial for highlighting the caliber and experience of the company's executive team. 2. Market research data. Any market research information that bolsters the market analysis and other important ideas in the company strategy should be included in this part. Demographic information, estimates of the market's size and growth, and details on the target market and the competition may all be included. 3. Product samples. If the business sells tangible goods, this part has to feature samples of those goods or pictures of the goods in action. This can assist in giving a clearer grasp of the qualities, advantages, and characteristics of the product. 4. Patent information. The Appendices and Exhibits section should contain information about any patents the company may have or is working to get. This might serve as evidence of the business' inventiveness and capacity to develop useful, exclusive goods and services. 5. Contracts and agreements. This information should be included in the Appendices and Exhibits section if the company has any significant contracts or agreements in place, such as partnerships, distribution agreements, or licensing agreements. This can be used to illustrate the company's strategic alliances and its potential for commercial success. Financial statements and accompanying documentation should be included in this area along with any extra financial data, including tax returns, audited financial statements, and other pertinent financial records. This data can contribute to painting a fuller picture of the company's stability and financial health. Each document in the Appendices and Exhibits section should be labeled and given a number for convenience of reference. It should be thorough, contain all pertinent details, and be brief and straight to the point. This section's objective is to contribute to the business plan's primary arguments and aid to highlight the company's advantages and potential. Remember, the Appendices and Exhibits portion of a business plan is crucial since it offers supplementary data to support the key ideas of the document. This section should contain all pertinent information, such as key personnel's resumes, market research findings, and product samples, and it should be thorough, understandable, and well organized. The Appendices and Exhibits section can complement the company's primary business objectives by demonstrating the company's strengths and prospects through the provision of this additional material. Once the plan is finished, a lawyer or accountant should evaluate it to make sure it is correct and complies with all legal requirements. Additionally, crucial is professional editing and proofreading to look for grammatical mistakes and consistency issues. Finally, the plan ought to be presented in a clear and appealing manner. This entails employing crystal clear language, a professional design, and information presented in charts, tables, and graphs. No matter who the plan is being given to, investors, banks, or possible partners, it should be suitable for that group of people. In conclusion, creating a business plan is an essential first step. It offers a strategy for the business, aids in raising money, and draws in investors. It should be thoroughly researched, written in an understandable and succinct manner, and professionally reviewed to make sure it complies with legal standards. It's crucial to present it in an appealing way so that the audience can easily understand it. Remember, every expert was once a beginner. If you want to learn how to start a business, get my book, How to Start a Business, a course in a book by Online Pro. Check out the link below. Thanks for joining us. Smash that like button, subscribe for more awesome content, and hit the notification bell for more empowering content.